Well, hello again, Solis Wealth Management family. Greg Solis here with the update. First of all, on the family front, an amazing week last week. I actually had the privilege of officiating a wedding, and it happened to be Jack's best friend from kindergarten, Spencer. Just a great young man, found himself a beautiful bride, Anissa. They actually had been dating since their freshman year in high school. And so they've been together over 10 years. And I officiated the wedding. It was it was in a little winery outside of Temecula, and it was just a gorgeous wedding. It was beautiful, not a dry eye in the place. And the vows, they said their vows, they were just beautiful. So anyways, it was a privilege to be part of that. Just humbled. That was actually the third wedding that I've actually officiated. So not that I want to do much more, but it was pretty special. Jack was, of course, one of the groomsmen. Monica and I had a blast there. So it was an awesome celebration. Nicole and Emily are doing great. They're getting excited to come home for spring break here pretty soon. And so they're doing well. So family's good on our end. I hope you and your family are doing well also. Well, market-wise, wow, what a volatile February. February turned out to be pretty crazy. Just all these tariff talks and trade tensions, and it's just creating a lot of volatility because no one's really sure, well, what's going to happen here? Does this create inflation? Does it slow the economy down? What are these tariffs? What's the impact that it's going to have economically? At the same time, we've seen the economy softening a tad. Consumer confidence came down a little bit. The labor market kind of, got a little softer. So we're seeing signs that maybe the economy is slowing down a little bit, which isn't necessarily a bad thing. It'll give the Fed some opportunity to maybe lower rates sooner rather than, having this prolonged wait before they lower rates again on the Fed funds rate. And the economy was potentially a little too strong where there was more inflation concerns. So having a little slowdown isn't necessarily a bad thing. However, we don't want to see it slip into a recession, which at this point, we think the odds of recession are still very, very low. Economy still is pretty stable. It's on good foundation. Earnings have been coming out on some of these large Magnificent Seven companies, and they've been very strong. And so things seem to be moving along nice with corporate America. The good news is, with some of this talk of potentially a slowdown economically, we saw interest rates come down. So that was good. The 10-year Treasury came down to about 4.3%. That's fantastic. It's been trading it's been right around 4.3, 4.5%. So that's good. That means that bond prices went up a little bit. So equity prices have gone down in February, but bond prices have gone up a little bit. So we're getting a little bit of that counter correlation that we talk a lot about, which is good. We got one asset class going down. We have another asset class that's stable or going up a little bit. So overall, everything's in good order. February was just a little more challenging, a little more volatile. Hopefully March will be better for us. But if you have any questions or any updates or anything else we can do for you, please never hesitate to give us a call. My very best to you and your family. Take care and God bless.